All right, folks, today is Tuesday, August 11th, and I want to do a quick summary of our performance today of the adaptive entry system. Now, in the live trading room, we show the charts for the S&P 500, the NASDAQ 100, and the Russell 2000 futures. We primarily focus our attention on the NASDAQ 100 for the purpose of demonstrating to our community of traders how to interpret the signals, and then those signals can be used on any time frame you want. We usually track 5-minute time frame, but you can use it on any time frame you want. You can use it on any stock. You can use it on any option. You can use it on any other derivative or index that you choose to trade. But we use the NASDAQ 100 as a way to kind of demonstrate and explain and teach how to interpret the signals. So there are three primary signals. There is a trend bias trade, which is basically presented to us each time there is a new color change and the second bar in that color opens. Then if it's red, we go short. If it's blue, we go long. If it's white, we do nothing. The second signal is what's called a momentum signal. The green signifies to take a long position if you're trading futures, or buy a call if you're trading options. Red signifies to go short or buy a put if you're trading options. And then we have the consensus signal, which is red to go short, or green consensus signal to go long. And obviously, if you're trading options, you're going to go long by buying to open a call, or buying to open a put if you're going short. In addition to those, we also have the Cycle Finder Plus, which when the blue line, which is the lead line, crosses over the red line, which is the basis line, it indicates a potential opportunity to re-enter a trending pattern. Today we had a really great example where this declining trend started at 1:40 Eastern Time, and we are about 12 minutes from close, and it is still continuing. Well, if you got into that trend and you took your initial profit out of that trend, it can be a little frustrating because it may feel like you're sitting on the sidelines and you're not taking advantage of any of the additional movement. During each movement, in a trending pattern, we're going to have movements lower, we're going to have retracements higher. We're going to have movements lower, we're going to have retracements higher. It never goes straight down. So we want to take advantage of that by following our signals. So the Cycle Finder Plus gives us an opportunity to re-enter a trade when the blue line crosses the red line. So here's a great example of Cycle Finder Plus crossing down. There's another profit available to us. And then the consensus signal comes on, there's another profit available to us. Here's the Cycle Finder Plus crossing down again, there's another profit available to us, etc. So we're not really left out of the opportunity just by simply taking our initial profit. We can take advantage of leveraging each of the signals that the adaptive entry system presents to us, as well as then using the Cycle Finder Plus, which is all embedded in the adaptive entry system. So what do we do with all that trading data? Well, we track it first of all. So I'm going to take a look at 2 days because I wasn't here yesterday, and I just want to share with you what the performance looked like both yesterday as well as today. So here's the daily summary, and what we can see in the two categories that we track, which are broken down between 9:30 a.m. and 12 o'clock, we track all of the signals that present themselves. And we're looking for, on the NASDAQ 100 futures, we're looking for about 10 points of profit, which on a single contract is about $200. So we're looking for 10 points of profit on each trade. Obviously, they don't all give us 10 points of profit. Some of them we lose on, some of them we have to adjust because the chart is telling us that the market may have a different idea about which direction it wants to go than it had when we first got into the trade. So that's category number one, because that really addresses a lot of people in our community who love to trade, but want to trade for a more limited amount of time than all day. And the second category that we track is trading from 7 a.m. to 4 p.m. and only taking the trend bias trades, those trending trades like the one I just showed you, where we have an opportunity to get into the trade and then re-enter the trade on the continuation signal. So what did we do today? Well, yesterday. Yesterday, we took 16 1/4 points on the 9:30 to noon category, and it's $20 a point for every point per contract. So I'm going to show you here in just a minute what we do with those numbers. Today, we actually lost 20 points in that category. Okay, we have wins, we have losses. You can scan back through here and see, the number of losing days we've had. Actually, the majority of our losing days have been in the last 5 days, four trading days, and it's just a period of time it got into where I was talking last week about how choppy it had been and how it was just more difficult to get on to harvest the level of profits that we're looking for. But one of my takeaways from this adaptive entry system that was created by New Cycle Trading and Analytics is this: even when we lose, the losses are very manageable. I consider a 20-point loss at $20 a point, a $400 loss, to be very manageable, when the average across all the time that we've been tracking is running about 27 points, over 27 points a day positive. So 27 points a day is a pretty positive number. And then in the trend bias category, where we're only taking trending alert trades, we're not taking consensus trades, we're not taking momentum trades, but it's the trend trade and the continuation of that trend. Yesterday we did 44.25 points at $20 a point, and today we did 39.5 points. So that was pretty strong, and the majority of that came this afternoon. We're actually down a little bit this morning. This morning was a little more challenging. We got stopped out of some trades, but you stay the course, you continue to follow the signals, and you just let the outcome be whatever it is naturally. So if you've not followed along with us before, I want to explain to you that we use this tool called the personal trading plan. If this was your trading plan, you'd have your name in it, making it very personal for yourself, but essentially it's a way for you to take the performance of the adaptive entry system in your account, the signals that you're trading, the time frames that you're trading, and track your performance, but not just track it, use this tool to project out 12 months what your potential income could be. So all of this area that's shaded in blue are the days that are done. Right, we know what the actual performance is of those days. Those are not going to change. I've already pre-filled, just to save a little time, on the category where we're tracking the trend bias. And yesterday, here, let me show you where we're putting this in. Yesterday was $2,655 of profit. So that was 44.25 points at $20 a point, so 44.25 times $20 a point is $885, and our trading plan has grown us, has scaled us up to 3 contracts, so it's $885 times 3, $2,655. That was our profit. And then the terms of our expense, our commissions and fees associated with that, there were 16 trades that gave us that 44.25 points of profit. So 48 trades, because it's 3 contracts per trade, so 48 contracts, and so that gives us then a total net profit, $2,463 for yesterday. Today, we did 39.5 points, right, at $20 a point times 3 contracts, because our trading plan has scaled us up to 3 contracts, and 42 contracts because we did 14 trades at 3 contracts per trade. All right, so that's our data entry. It takes you literally a minute, if that, to enter your data at the end of each day. And now the important part comes in, where you're doing your planning. All of the days that we've accumulated, which is now going on 6 weeks, we're into our 6th week of having profiled this in the live trading room, shown the actual performance throughout the day, tracking it in our personal trading plan. We're going on we're into our 6th week, so we're almost at 6.5 weeks. The average point production across 6 weeks is 22.32 points a day. Now that includes winning trades and losing trades. That's averaging out to about $843 a day. So now we have 3 fields that we want to pay attention to and make sure that we are planning properly for the remainder of the 12 months. Remember, we have 6.5 weeks behind us. We have another 45.5 weeks left to go in a 12-month period, and we want to properly forecast to see what our income can potentially be over a 12-month period. So I broke this down and took a look separately at the winning trades and the losing trades, because this 22.3 is an average of all winning and losing trades. And our losing trades are actually averaging 15.4 points a day, 15.4 points across those losing trades. Now that is not per day. We allocate 1 day a week, on an average 1 day a week, to have losing trades. So we're right in line with what the plan is. In fact, I'm going to bump that up to 15.4 because I want my future forecast to be as realistic as possible. And the winning trades by themselves are averaging 25.17 points a day. So I'm going to leave that at 25. So now I have a future forecast for the remainder 12 months that is based on reality. It's based on what we're producing from the adaptive entry system in terms of performance, some winning, a lot of winning days, but a few losing days. I'm right in line with what I planned in my trading plan. And so I want my future forecast to be lined up with what my actual performance has been. Back in my corporate days, we referred to that as a run rate. What's my expense run rate? What's my revenue run rate? Well, my run rate for income right now is 25 points a day. My run rate for expense, I'll say losses, is 15.4 points 1 day a week. So I'm going to plan my future forecast based on reality. And then the third field that you can play around with is, what's the maximum number of contracts that you allow your account to scale up to? Some people want to keep it very conservative. Started with 1 contract, graduated up to 2 contracts, then graduated up to 3, and I freeze it there. I don't want to trade more than 3 contracts. Regardless of what you put in that field, it's always going to be based on being no more than 10% of the balance of the account. So you need $500 per contract that you trade for margin. So in order for us to be trading $500 times 3 contracts, in order for us to be allocating $1,500 to our trades, I need $15,000 in the account to be able to do that, because we're not going to allow it to trade more than 10% of the total balance of the account. Now, ultimately, that becomes a very conservative number. So you can increase, you can scale to more contracts if you choose to. Still not going to be more than 10% of the balance of your account. And as long as you have a realistic target of where you are forecasting versus what your run rate is, then you should consider that a fairly conservative forecast. So if I average 22.3 points a day and break that down to, I'm going to win at 25 points and I'm going to lose at 15.4 points, and I'm going to win 4 days a week on an average, and I'm going to lose 1 day a week on average, and I trade no more than 3 contracts, that tells me that I could grow my account by $265,000. So that's an income, potential income of $265,000, and we started with a $5,000 balance. Now, if you're looking for a bigger income, this isn't about, being greedy. This isn't about, just wanting or needing more. It's about saying, listen, I'm very confident in allocating no more than 10% of my account, and I'm very comfortable with trading for my 25 points of profit and my 15 points of loss. I've factored all that in. So I'm willing to increase this from 3 contracts to, I don't know, maybe 5 contracts when we get to that point. Well, that dramatically changes what your potential income could be. So it takes it up to about $424,000. That's not a guarantee. That's not a certainty. It's all going to be based on what your actual performance is going forward. We have 5.5 weeks behind us, and we're looking for what the remainder of the 12 months is going to be. The more actual data you have plugged in as you grow your personal trading plan, the more realistic your forecast is. So that number may grow, that number may decrease, but you are somewhat in control of it because of the other factors that are influencing the growth of that number. You're in control of it by deciding what your maximum number of contracts will be. For now, I'm going to leave ours at 3. I think a $265,000 potential income, starting with a $5,000 account, is a very, very strong number. All right, so let's go to our other category, the all category. This is the 9 to noon. Okay, so yesterday we did 16.25 points at $20 a point, 3 contracts, and we did 9 trades at 3 contracts each. And today we had 20 points of loss at $20 a point, so that's $400, but we're trading 3 contracts. So it's a $1,200 loss today, and we traded 10 trades at 3 contracts each, so that's 30 contracts. So we have that plugged in, and I want to really emphasize this. You can see back here that 4 of the last 5 days were losing days. Sorry, that is incorrect. 3 of the last 4 days were losing days. But this is why it's so important to use a tool like the trading plan, where you can then look at your totals, look at your averages, which I'll scroll up to here in just a moment. But you want to be focused on the big picture. You don't want to get preoccupied by, oh, this is just really a bad week, or it's a really bad few days and I don't feel very good. Well, you should feel very good, actually, because despite those losing days, that series of losing days, we had this whole series of winning days with no losses. It's going to balance itself out. And even with those losing days factored in, we have an average of 18.5 points a day. We're averaging just over $619 a day. That's very, very strong. And like I did in the other tracking worksheet, I broke it down between winning days and losing days. And our winning days are averaging 22 points a day, averaging 4 days a week of winning at 22 points. And our losing days are averaging 15, actually, sorry, they're averaging 16.15 points losing. So I'm going to increase my losing plan to 16.2, just so I have a very realistic forecast. And now I can see what my forecast is based on all of the actuals for 5.5 weeks and the future forecast using those factors for the remainder of 12 months. And that's based on a maximum of 3 contracts. If for some reason I thought that I needed more than 223,000, or I felt confident in all of the data, felt confident trading the adaptive entry system, I felt confident in listening in as we provide price targets in the room and Elliott wave analysis and discuss fractals and the Virgin bars and all the other things that go into successful trading. If I felt like I needed more, it's a very simple adjustment here to say, I know it's not going to exceed more than 10% of the balance of my account. I'm willing to go to 4 contracts, or I'm willing to go to 5 contracts. This is completely within your control as long as you have a realistic forecast and a realistic view of what you're doing. So that's the summary for yesterday and today. I think overall we're in very good shape. Today gave us a couple of challenges right early in the day where we had a couple of back-to-back 20-point losses, but at the end of the day we still finished positive. Yesterday, early in the day, we had a couple of losing trades, 3 losing trades out of first 4, but we ended up doing okay by the end of the day. So this is a process of you just follow the signals, you do what's necessary, and you know what your plan is for your personal trading, whether or not you want to take all of the signals, what kind of time frame you want to trade, and how you are going to actually perform in your personal trading business. So again, thank you for being here, everybody. Really appreciate it. If we can help you, please let us know. Pretty excited about being able to show every single day the entry into the personal trading plan, so you really have a good, clear understanding of how your daily performance affects your overall future income.